Alright, this is going to be scan for the week of the 19th and just the broader market overview. What I did last week and just my general thought process and bias here, and how everything's kind of setting up for what is, in my opinion, going to be a phenomenal short trade. There's a ton of confluences building out here, and in an environment that hasn't really offered many opportunities for me options wise, I now see a massive asymmetric risk reward in my favor. And I've been waiting on something like this for a while, right? Because this range has been interesting. It's been beneficial. It's been a great experience overall ever since, the entirety of 2025 and the entirety of quarter two, especially, because of the fact that we just, as far as an options portfolio, I haven't seen much of an opportunity here that I really like, long and short, minus the April 7th sequence. That I can really slam the table on. I think, I look back at my best ideas and my best trades, and it's been slamming the table on something that I'm really confident in when everything kind of aligns in a window that I like. But also not being too optimal in the sense that, I allow positions to build out. I understand that, the risk rewards in my favor, and I can experience a little bit of drawdown, and we won't be concerned about that. That takes a little bit getting used to in terms of open P&L being read and building positions out and whatnot. But, I think of this brain's very beneficial, very, very, a lot of great experience overall, and just an opportunity where I've just been consistently getting better week by week, month by month in the past 2 quarters as well. But enough of that. This right here is a phenomenal example to me of a redistribution, right? A phenomenal example of a distribution, a preliminary sign of a buyer, right? A lower high off of a really pivotal area within the chart. Stalled progression, but no real clean structure coming off of this into a massive event. Your first kind of initial signs of the short-sighted trade being over, but also not the most appealing leg, and still the potential for that August 5th-esque kind of changing of hands that really will spark the rally higher. And that's kind of exactly what we get, right? This is a little bit more historic of a sequence, right? From April 2nd's close to April 7th's open, we were down 15%. And then we obviously get the historic footprint, the 7th, the intraday reversal to 8th, and then the, third largest green day in the S&P 500 ever, right? But the higher we trade and the more that this timing aligns, right, and as far as with how this rally acts, especially in a lot of names and a lot of sectors, and just the broader market as a whole and the sentiment, especially into a May OPEX that was, if we go ahead and pull up this picture, a May OPEX that was massively skewed to the call side. This is a rally I think that's being propped up by short covering and dealer flows in terms of buying back equity and the underlying to hedge their delta exposure. This is massive, right? It's obviously not as large as the quarterly expiration next month, but this is a large thing that you have to notice that's propping it up in this unstructured rally, right? And then you also have the investor sentiment overall. Oh wow, I was completely wrong on that. Yeah, a lot of call buying, right? From the uninformed and the late party, right? And I break down this range, and like I said, a lot of confluences here: volatility, certain sectors getting bid and certain sectors getting sold, inverse ETFs, mega cap, tech stocks, everything, right? Crypto, everything just makes sense here to me. And I really do, I look back at my P&L's been flat since this day on my options port, and I very, very well understand why. And there just hasn't been any opportunities, right? We saw the higher low within this range, or the initial attempt on the gap down to the 10th, right? Where you have the sell climaxes built intraday. There's still a buyer within this range. This is a massive footprint. You're naturally going to see digestion of it. You see eight inside bars, 9 inside bars, and you're going to see digestion. And when you see this little effort from any sellers, and you notably see, you break down the intraday price action on a short week of the 14th and a Good Friday. This is all getting bid. this was getting bid off the Jay Powell speech and the strong close, and then the kind of subsequent inside bar on the 6th and 17th. And then we developed the new week opening gap down, and you see the low swept, right? It's just a passive buyer and a draw to an area where there's a larger amount of demand and the hand subsequently changing, and the exhaustion and lack of any effort from sellers within this print, right? And it's just digesting this. Things are going to be, there's not going to be a lot of liquidity. When we have such a historic move, you're going to need time, and especially during a short week as well, even into April OPEX, right, where volatility can become a little bit unpinned. Those things need to digest, right? Now, what happens here is it's just kind of a lockout rally, if I would say, right? You have the footprint on the 21st, you have the gap up, and the new week opening gap fill on the 22nd, you have the following gap up. This was a pretty, the intraday price action here was pretty appealing, but to me, it just wasn't anything that I was going to aggressively build out a position on. I was kind of waiting for a higher low. And then we get this path of least resistance print, where if you look at the hourly candle, there's a nice buyer, stall within this range, and lack of aggressiveness from a seller. That showed his hand that day. And then we can kind of see the micro distribution occur as we pull into this April 3rd bear gap and above the April 9th high, right? And I did take some short exposure there. And we see the GDP gap down and establish a higher low, right? A notable higher low, and just kind of floats through this gap, sees the rally, and it closed the end of the month rally. But I cut half my position for 40%, the other half for break even, right? I knew the kind of potential that was here, and it's just, we're going to trade higher. Am I longing this position here on options, though? No. We had Meta and Microsoft reports the next day. I just don't value that as a phenomenal trade. And we get the gap up the next day, right? This is kind of giving you a notable footprint as well. Not the most notable seller as far as an hourly print, but on a daily candle, you're beginning to see that exhaustion, right? The Friday 1.5% day on a little bit less volume. And then we kind of see the gap downs and lower highs Monday and Tuesday, the week of the 5th, right? But nothing super appealing. We had the Fed meeting that week as well. And then we see the breakdown, the draw into the May 1st gap, and the kind of rally off some chip news in the day, right? It's just, I'm not building out long exposure here. I'm not building out long exposure here. If anything, like I said, I could have handled this position a little bit better on my portfolio, but this is a shares trade, right? You're building out shares the 4th and the 7th, right? You're building them out SPY and QQQ, in my opinion, are just the best vehicles because, you're not going to get caught in an underperformer, and you're not going to try to time an outperformer, right? You obviously have some Mag 7 names that I think perform very well as well. But, just bidding shares, you have a really nice cushion, and the subsequent digestion, maybe get more leveraged exposure on TQQQ, SPXL here, and just ride up into the gaps above, right? And cover your position as we begin to see this exhaustion. And, even just these two higher lows here are not, pullbacks into the gaps, structurally sound. It's not really the most appealing for me. I don't want long exposure on options there. I'm fine taking the stab short, cutting for a small loss or green, and then cutting the rest for a loss, and just waiting, right? Like I said over here, I waited for this position or for this trade for a while in terms of the 7th and the 9th pop, and I didn't execute. It didn't line up perfectly with how I wanted with data and exposure that I could get, but it just goes to show that over here I'm not short, but I'm also not aggressively long, right? And over here, I understand the slam to table environment, and I'm not aggressively short here. I'm not aggressively short here. Like now I'm seeing that window, right? We have the distributive sequence, the 8th, above that weekly high, right? The climax off of Trump telling people to buy stocks. You know how many people probably went and bought stocks off that, and they just get dumped on. You have the distribution intraday. You have the gap down, the lower high internally on Friday, and then kind of the chop as well as we trade inside the confines of the Thursday, May 8th print. And then we have the new week opening gap up on some trade talk deals. That's not really a trade talk. And now you're just seeing the steam run out, right? You're seeing the exhaustive end of this bear rally, in my opinion, which was a phenomenal long opportunity. And sometimes the shares trades are better than the options trades. It's just so notable, so easy to tell that this was a phenomenal reversal, and a phenomenal opportunity to bid shares. You have a couple opportunities to take leverage exposure, and I don't view this, I know I said that last week, but I view this as just the end of this rally, propped up by short covering and hedges. A great opportunity nonetheless, but not a generational low like you would classify COVID or 2008 as, which I saw a lot of people kind of saying this was. Um, you're 25% off the lows. A little bit less than that within a month and a week, give or take. So, if you're just now getting long exposure because we're basing the 200-day moving average, I view that as a terrible trade. I view, an asymmetric risk reward in your favor alongside on a historical sequence in the beginning of April, giving you a phenomenal cushion and opportunity to roll profits. But, as we trade higher, the risk reward becoming less in your favor alongside more in your favor short until now. I view it very, very skewed in the short-sided favor here, right? We even just looking at this week's price action, it's just, seller off rip, bid in the gap, and we see this float, right? It's just propped up by these hedges. You're seeing the stall and the exhaustion, but no real aggressiveness behind the seller. And then, look what we get after hours, right? We get the Moody's downgrade, we get the 1% breakdown after hours, right? There's something fishy going on there. I'm not gonna try to speculate, but there's something fishy going on there with how that downgrade happened, with futures still open, but after hours on the New York Stock Exchange and the Nasdaq, something fishy going on there. And it's poetic that it happens after hours. Just look at the volume pouring in here. Look at the exhaustion. Look propped up by these flows. Like I said, we have the OPEX that just passed on the 16th. We have expiration that passes on the 21st, and I think after that we can get a really aggressive move here, right? So you look at a lot of signs. You look at QQQ as well. It's the same sequence, right? This was actually my short vehicle the week of the 28th. You see the exhaustion, you see the micro distribution, the gap down. We did the April 9th closure, establish a higher low, and trade higher. But by no means am I positioning myself long there, right? We had the April 3rd gap fill that I took exposure off of, and we see the higher low bid. Same thing, the 7th and the 8th, the 6th and the 7th, right? Same thing, the 8th. And then even look at the volume coming in on Tuesday on a $7, $8 candle in comparison to the $20 print we had on Monday. If you're just now getting long exposure, that's a terrible idea. You had a massive skew in your favor off of the 2021 highs in April, right? Undercutting the 2020 or August 5th lows, even the April lows as well, even the 2024 lows, right? Just a phenomenal opportunity for you, and the massive footprints, right? You can build out your longs here and here on some shares, and just even cover a little bit on the 9th. Take your long exposure on leverage here and here, cover it all, re-roll it off the internal digestion, and just cut your exposure up to there, right? Sometimes shares are better than options, and I view this as 100% that opportunity. If I had a shares portfolio, I would be 100% fine not trading any options in this environment, and my leverage exposure on the 7th and the 9th being TQQQ, right? Just considering the fact that we have, that's a 3x leverage, and with VIX at 60, there's no need to slam options, right? But now VIX is digested a little bit, maybe if you want to, but I just don't view that as optimal. So the same kind of consideration here, or same kind of concept here. Look at the weekly prints. Look at where the volume comes in at. Obviously it's a 7% week. You're gonna have some volume, but on an exhaustive gap up like this, it's just, you really have to understand why this is super bearish, right? And I bring myself to this SPX, this redistribution, right? We have the higher lows established. We have the selling at the highs and the money rotating out of U.S. equities into the election in 2024. We have the stalls. We have the footprint on December 18th Fed meeting, right? We have the kind of low, taking out these lows, this three lower accumulation in the election gap that gives you the stall at the highs. The attempts to mark it up on the February 3rd and January 27th new week opening gap down is met with exhaustive weak pops in the sellers at the highs, and then the pressing of this on February into the OPEX. And then we establish a lower high, right, on the 3rd. We trade lower. Break down. We see the preliminary signs of a buyer throughout that sequence a little bit, but nothing insane. And then March 10th, we begin to see a buyer here. Right? We begin to see a buyer a little bit. We see a decent little leg, but, there's that kind of 576 spot that we see the exhaustion at. Essentially, it's you can classify that as a potential long. It's just kind of the sign that the short-sided trade's over. You want to have some long-sided focus, but nothing to slam the table on. And we do end up seeing the exhaustion and subsequent lower high of 576. And then, now we're in this range, right? We're in the range of a sell climax that occurred on the 7th. Historic volume, the reaction, the internal, kind of high or low, the stall within the gap, a sign of weakness building out here on the 21st. And then kind of like your UT, your high or low, right? Um, and now potentially developing a UTAD that, in my opinion, I'm just going to get all this out the way. Get all this out the way. I don't really like to label Wyckoff charts exactly how it occurs. The UTAD is more a sentiment thing in my opinion, right? When you're breaking out on this exhaustive volume and everybody's getting bullish and it's occurring at a pivotal time frame and area within the chart, it's more of a sentiment thing, in my opinion, um, than it is a clear-cut structure. But just the seeing of this redistribution, right? And the JPM collars at 5905, that's a really big spot, and we broke down right under that after hours. If we open up and reclaim that as a lower high, I mean, that's a pretty pivotal spot. You're seeing the exhaustion as we trade higher. You have the gap to fill below. It's pretty notable here, in my opinion. It's just a redistribution. It's how these things work. We're not if this were to meaningfully trade to new highs, in my opinion, you would have wanted to see this. You would have wanted to see digestion, see a nice leg, see a harmonic pullback, maybe a harmonic second lower lows soaked, and appealing higher highs and higher lows developed internally. This is not the case, right? This is exhausted bids, breakdowns into data sets that are bid up and give you floats higher that are propped up by these hedges and lows, right? And short coverings. So in my opinion, we see the gap fill, which kind of aligns with the April 2nd closure as well, at 564, probably by June. I do think that it's a 4.5%, 5% move. That's what I'm going to try to capitalize on personally. So my trade this week, I did initially position myself in XLF. I decided to cut that because I feel like SPY is a little bit more cut and dry, and I'm focused on making my job as easy as possible. And with the XLF trade, I kind of left myself questioning which targets I'm looking for and whatnot. But SPY, I began positioning Thursday around the highs, with about a third of the size that I want, a third to half of the size that I want, right? Like I said as well, this is just a broader environment where I haven't had a slam the table opportunity until now. With the options trades, um, with the options trades, I just feel like you have opportunity with leverage and with more than leverage with the Greeks as well, offering you a phenomenal opportunity to capitalize on volatility within these names, but you also have time and volatility playing against you in some sense. Um, you want to find opportunities that you're confident in and slam the tape on. And since April 9th, since April 7th, that week, there's been nothing. This jumped out to me, but if we would have maybe gone, boom, pull back into the gap, if we had that higher low in the May flows, I was slamming the fuck out of this on June's into 564, but we never got the opportunity, man. And I'm not, like I said, I'm not bidding that. I'm not bidding that. This is a short opportunity. I think I closed around 18%, but I didn't take any ads yesterday just because of the fact that I knew I would get kind of cooked on theta. I have June 30th expiration, um, and we have expiration on Wednesday. I think that'll play a big part in terms of the unpinning of volatility. Volatility is this went from 60 to 17, and this is very compressed, right? And when this happens and the unpinning of this occurs, things can get aggressive, right? And that can also play into your contracts with the Vega exposure and the implied volatility moving, especially as more people buy puts as we trade lower, in terms of the late shorts. I'm 100% confident in this idea. I have a little bit of drawdown, but I'm looking to get full size. I'll probably add some on Monday and then Wednesday as well. And I'm looking for 564 in this trade, right? If you look at the redistribution chart, I deleted it, but more than likely we'll have this, maybe a lower high within the gap or off of 590, which is that JPM collar. Um, and then, I think we push to 564. I think when you think about the consideration of a last point of supply and this distribution, especially post-May OPEX and Vixp, this can push you from 590 to, my first trim would be 564 to 570. Um, potentially even to 554 before we establish the last point of supply and then get the move lower, right? I'm not going to predict too much here. My target's 564. The relevance behind that, the volume built up as well is pretty important. But I view this as a massive position I can build out. I view it as a position that I can be really confident in and trade shorter dated along the way. You know, if we, like I said, if we post expiration, get a weak bid off 577, dude, I can get this short to the 570 range on some bi-weekly. So that's up for interpretation. But you know, it's one of those things, right? I have tried this out. It's the delayed gratification as well as just having a thesis, having a thought process, trying it out, cutting it, and waiting again, right? And that's what I've been doing ever since mid-April, the beginning of May, and now I spot the opportunity presenting itself. 564 is my target. If we trade any lower, it'll be like 560. It'll be runners of the position. I'll cut it, and then I would expect, because of the relevance behind this, you know, election gap, January 13th low, March 25th high, and now the low of this week for May 12th, right? I would expect maybe a bid, a lower high of 577, and then we get to pull back lower. So not going to try to hit this to, you know, 550s, but 564 to 570 with potentially 560 on the table there is my opportunity here. And I'm looking to get massive size. I mean, I'll just throw it out there. Trading with a $2,500 options portfolio, I'm looking to get at least $1,500 to $1,600 in this position. Have a little bit left over to trade shorter dateds, right? Now the shorter dateds would be day trades, right? This would be my swing position that I'm building out and I'm letting breathe. Like I said, if we get a weak bid off of 577, that's a clear sky to the low 570s, in my opinion. So something I'm looking at there. Same context here with QQQ. I'm just going SPY. Like I said, because of the 564 and 576 to 7 relevance, in terms of, like I said, the mid-March highs, the January lows, the election gap, and then the April 2nd closure, right? I think there's a lot of relevance, and I think, you know, when you think about the distribution, this can give you that opportunity to re-roll it. And what this sets up here is, if we establish a last point of supply that's pretty meaningful, in my opinion, is short-sighted opportunities on other names, like the NVIDIAs, like the QQQs, like the financials, right? But you know, that's kind of my read on indexes. It's a quick fucking 20-minute, 25-minute dissection of SPY and QQQ redistributions. Now let's get into some other red flags, right? So the financial sector, right? The financial sector. This is a phenomenal red flag, a phenomenal reading and gauge of the broader market as a whole. I'm not going to sit here and be like, oh, this is why. No, I'm gonna understand the signs that I've seen and the way that I've seen this move before, and the way that I've seen this kind of front run the breakdowns that we've had overall, right? So this is a sector, in my opinion, that has had money rotated out of it since Q1 to Q2 of 2024, and we see the distribution on a lot of these names. Just go ahead and pull this up, right? And you see the rally here, right? You know, like I said, you're seeing new all-time highs in 2024, Q2 and Q3, right? And I think that's when you begin to see money rotate out of it, especially on a lot of the individual names. See the buy climax off of the election, the exhaustion, the bid within the gap, the pressing at the highs, the reversion trade, or the breakdown, the reversion trade. Now look at where the volume is coming in at, right? We see, like I said, you know, we see the exhaustion, the pullback into the gaps, this previous daily distribution that, you know, broke us down. We never bid the lows. We never filled the gap. We see the weak bid in the March or in the April Liberation Day. But this was also, you know, a time where I was not crazy short, also not crazy long. We get the massive changing of hands, bidding the April or September 11th low. And then, you know, this floats us higher, right? With, you know, kind of, in my opinion, the preliminary signs of distribution occurring, right? We never really get a clear-cut picture, clear-cut footprint like we did here and here. But whenever we get an exhaustive look like we did here, the week of Thanksgiving. But you know, we have the volume coming in on Monday. We have the subsequent digestion, and then the rally end of day here, where it's just exhausted, bro. There's just a lack of a sustainable bid. There's just highs being sold, no lows being soaked inside of the in-walk. Highs being sold into a May 4th or March 4th gap, and the previous highs from November, the 2024 year-to-date highs in its previous area of distribution. And you couple that in with the weekly chart, couple that in with the higher time frame distributive look of this sector and a lot of the individual names as well, and just the relevance that that has to the broader market as a whole, just the equity market as a whole, and risk on and risk off assets. That's a big red flag for me. And this is a name, like I said, we're down to 51.10 after hours. Down 1% after hours. Um, this is something that has a lot of meaning, and coming off of this previous distribution, when you already have the preliminary signs, especially even on the 8th at the April 2nd closure, this is a sector I'm pretty notably bearish on. But I would wait to execute personally. I had a position on here. I built this out on Tuesday. I had $48 July 18th or 13th? I think it's 18th. Puts. I was looking to get like 25, 30 of those, but I opted for SPY because, like I said, we have this gap fill here, we have this gap fill, this gap fill, this gap fill, and this has a lot of potential, but I view it as a opportunity that I'd like to go later on, just because we have, like I said, the full gap fill, 4 gap fills, 1, 2, 3, 4, and it leaves a lot of questioning on the table, and I'd rather trade a lower high. But a notable sector that's very weak, a lot of the notable names as far as JPM. You have the rally. Look at where the highest volume print comes in at the highs of this rally. Digesting this move and seeing the exhaustion propped up by the flows, sellers off open Monday and Thursday, then the rallies and the close. It's just unappealing for me. The Schwab distribution is much more higher time frame than anybody can imagine. This is something that's been brewing since the bank crisis in March, where you see these rallies, right, which is notable, but you see higher lows attempted and progression stall at the new highs again. When I see something like that, most of the time it's not super appealing, because of the fact that you don't have lows bid, hands changed, supply absorbed, path of least resistance established. You have the exact opposite. You have highs sold subsequently every time we attempt to make a new high. Attempts to accumulate this met with sellers, and now a daily distribution at the 2023 highs, giving you this potential U-tag, right? You have the preliminary sign of a seller off the earnings report in October of 2024. The stall, the pullback, the rally off the election, and then the November 11th gap up. I think this was 14th. I don't even know what that was. This notable stalled progression here, and then the massive breakdown, right? Your first initial sign of a larger seller. Pull back into this November 6th gap, the continuation higher off the report, giving you this like hourly redistribution. Historic volume pouring in here, highest since the lows of 2023. And then a massive breakdown again. Failing these lows, lower high, failing these lows again, right? Just signs of a larger seller here. And then, attempts to mark this up met with just unappealing structure, right? Where we're seeing this exhaustive look, we're seeing the signs of a seller here on Monday, right? This got absolutely disintegrated on Monday off open on a 3% gap up, off the 2023 highs, right? And when you're floating higher like this with no volume, and then you see this after hours move, this is kind of giving you your UTAD look, especially giving you the following or previous price action. And in my opinion, once you establish a lower high, similar to the financial sector as a whole, this offers you a phenomenal reshort. And I think, like I said, I think that can align with 564, lower high, and then I can begin to look at some individual names. Because I personally would rather trade individual names that can underperform than simply trade SPY. But I can't justify trying to time the top on these. I'd rather trade, gap fill, lower high, and then trade this 76 to 75, and catch something similar to that on XLF, which is just a notably unappealing sector. But I'm going to be a little bit patient and wait for the right time for this sector. But Schwab's 100% a big one that I'm looking at in this distribution. I mean, this can push you to sub 70 by quarter 3. That's an insane take, I can't lie. By quarter 4. But definitely a short-sighted name I'm focused on. Apart from Schwab and XLF, I probably wouldn't touch a lot of this sector. The options chains are really unappealing. But a lot of red flags again. Look at the volume pouring in on this Monday print on Visa. The exhaustion, the continuation higher. Even if this establishes a new high, it's taken them 74 days. And a very weak and unappealing structure again. Same thing with MasterCard. Here you go, establishing a new high, 74 days for a $2.35% new all-time high with a really aggressive seller off open on Monday, and then the continued exhausted bid that's propped up, giving you a very unappealing weekly closure, in my opinion. But you're gonna need that lower high. You're gonna need that lower high. On a lot of these names before I short them, but just a notable red flag and distributions that have been like this has been a distribution since November. The report here, the consolidation, the failed progression at the high, the breakdown lower high, and massive changing of hands that sparked another stall. The Wells Fargo group, or Wells Fargo chart, once again, just seeing that exhaustive look within a gap within where a lower high would be and where there was a previous larger seller. Goldman Sachs, all the volume coming in on Monday, and then the fizzle higher as we trade. A 17 million volume print on a gap up like this, giving that exhaustive look, like I said, where there's a previous larger seller, and it's just the same kind of concept on a lot of these names, right? Where you're seeing the rally, and now you're seeing the volume pour in at the highs and the exhausted look. Morgan Stanley's another big one, right into these previous areas of a larger distribution for your potential like lower high in a weekly perspective, right? And like I said though, I'd be pretty patient with this sector. I don't really want to jump the gun on shorting this. I'd like maybe a lower high here or even something like this where it's a massive breakdown and lower high, but Schwab's a main focus going forward, 110%. If we can establish a test, I guess, on an internal perspective that aligns with 564, maybe like this, and then we get like an actual macro daily lower high similar to how we did in March to the mid-March sequence. So definitely keeping that on watch. 100% a counterparty liquidity generating event. You can offload their inventory on, see a breakdown, and if, like I said, if we can develop those kind of lower highs here, I'll trade this into the gap below. Same kind of structure here, and I think it can align with 564. Now XLP, right? This is a unappealing chart options wise, a sector that I don't like to trade, but a big red flag for the risk off names getting bid, right? You have this seeing a phenomenal weekly sequence, right? An underperformer post April 9th print, post weekly closure on the 7th. But breaking down the context of this, not an unappealing chart on this basis, right? Now, would I be ultra mega bullish long here? No. But when you consider the topping out in 2024, the breakdown in January, right? The outperformance into March, right? When you look at how we performed in January to March on SPY, you look at how we performed January to March on XLP. It's a big notable sequence. Stalling at these highs again in March, seeing the kind of seeing the pop the week of the 31st, the stall, the outperformance the day of the 3rd. There's a larger seller up here. See the breakdown, see the two lows. The weak pop to some extent, and then the massive breakdown on the 4th, where we kind of have that peak fear, giving that draw to the previous year-to-date lows on the 9th. Or 7th, seeing a lot of volume, seeing an underperformer on the 8th, and then a nice pop on the 9th. And then we get the, in comparison to the move that we got on 10% on here and on SPY, I think we made 15% move. Yeah, kind of underperformed, right? But what happens here is you see the stall, you see a higher low attempted on this print, you see another stall as we trade higher into this range, and then kind of another low bid, failure within this gap. And then Monday we had a really appealing outperforming print, right? We had the gap down, the volume pouring in, and then a super clean closure, right? Where you had these giving you this gap up, exhausted looks. XLP saw a nice buyer off this print, and then the fizzling out or the fizzle out lower in terms of an exhausted seller on very notably low volume, undercutting these previous lows, this weekly kind of support, and digesting more of this move, giving this super notable outperformance on Thursday, and then the continuation Friday, right? For this appealing consolidated 1, 2, 3, 4 weekly prints closing inside the week of the 14th, bidding the lows and kind of bidding the November lows as well. Just a notable sequence, right? Not giving you a phenomenal discounted pullback that's longable, not giving you a long side focus that I'm fond of, but giving you a notable sequence nonetheless for risk off names getting bid, right? Gold. Gold as well, right? We're kind of seeing this buying going on gold. You have a notable wick here. You had the parabolic long or parabolic short breakdown, lower high, and now it's almost like this is getting bid again, right? It's almost like, we had a lot of the late longs trapped here in April, which was sub, along the range of this digestion. And now we have kind of the long opportunity on risk off names showing its hand again. Would I touch this options wise? No. But very appealing consolidation, bidding of the lows, super clean pop, and maybe on something like that you can long this, but I don't think I would personally. If you would, it'd be back to like the 83 range where there was a previous seller and the previous highs up here. But I'm not appealed by this long, absolutely nowhere. It's just a concept, the context of why this means a lot in terms of the Thursday and Friday and outperformance in comparison to SPY and QQQ, and even the Monday print, the Tuesday, Wednesday exhaustion, and like I said, the Thursday and Friday print. So that's just a notable red flag for the risk off names, in my opinion. And it held up fine after hours. So I don't like the energy sector. This is a lot of consolidation off of the bid of this October 2022 gap initial attempt, but like I said, similar to just the broader market's weekly closure with all this volume, this is even more unappealing because it closed in the midpoint. Um, so yeah, that's kind of my outlook on those names. Like I said, yields could pop. I don't really know what this means, but TNX looks pretty good on a daily pop and consolidation sequence, undercutting these lows. So that's something to take into consideration. Um, I know those probably popped after hours, um, and I know bonds got faded after hours as well with that news. So there's something going on with yields with the digestion of this post, April rally on yields. I don't want to try to speculate, but it's a notable red flag that you're seeing yields look appealing alongside and the broader market continuing higher, propped up by these short covering inflows. VIX is, like I said, with VIX, it's very, very compressed, and it's more than likely going to see a pop once the expiration uh, passes by, right? The NVIDIA chart, like I said, these are very big red flags when you see the previous. So obviously, this is not an investment for me, but even going back to June into March, um, you know, this is not a good like long-term buy, in my opinion. Except for potentially now, right? You have the previous climaxes built out. You have the nice leg, and it's the same context on SQQQ. You have the exhaustion undercutting these new lows. You have the potential for the hands to be changed. Like I said, these are still like traded. There's still stops that are hit under here. And these are due for a nice pop, especially undercutting these lows. And this could potentially end up being the bottom of NVDS, right? Now, I don't want to speculate on that, but very potentially could end up being the bottom, just with the exhaustion of the volume overall. So if I have a shares portfolio, I would not be opposed to building these out for new year-to-date lows on NVIDIA and QQQ. Sue me. But if you have your profits from the reversal trade on SPY and QQQ and a couple mega cap tech names, and you throw, obviously there's no reason for me to even have long exposure. There's no more than there is for me to continue to, like, why would I be building out longs here? If you have some profits to play with, go ahead, and I don't have an issue with throwing your money in NVDS and SQQQ for new year-to-date lows as far as a position that I would hold the majority of quarter three, right? But the NVIDIA chart, I mean, dude, this is disgusting, right? We have 16% weak, and it's one of those things, man. you know, you can look at this and you can say this was a good long. I see no reason to be long side focused on Nvidia into this week. We get the kind of initial pop on Monday, 5.5%. Continuation the next day, even more volume, and then look at where we kind of see the stall at on the earnings print, right? It was just, this was a print that very imbalanced, undigested candle, and we finally see the draw into it, and that's kind of when I think we're going to see that exhaustive look. We see the stall on the Monday print, we see the stall on the Wednesday print, just being propped up by these flows, not beating the lows, selling off the highs instead, and where we're at after hours, 132. So, this is one of those names where I would take a day trade here. If we kind of gap down in this range, maybe bid this 131 spot, give you a divergent pop into the new week's opening gap. I will take some shorter dated puts. By shorter dated, I mean bi-weekly off 135, probably post expiration, like I said, and short this to 130, right? And just go step by step, gap by gap on this chart. But this is one of the names. This is the only other name besides SPY and QQQ that I would take shorter dated puts on as far as bi-weekly positioning goes. Definitely a focus this week because the obvious seller, you have the earnings candle. And like I said, the notable hands changing on a daily perspective, but nothing throughout this range in January to March to April that gives you a meaningful new all-time high, in my opinion. Gives you a massive change of hands on historic volume. This is just a kind of bear rally reversion trade that underperformed substantially, and then we see the kind of UTAD-ish look here, right? So a short side focus this week for sure off this 135 spot. Meta, I mean, look at the weekly print on the Meta chart, right? A sign, a name that I think has been, like I said, having money rotated out of it for a while. Get this UTAD-ish look, the breakdown, and now the subsequent lower high, right? The exhaustive look, the stall, the kind of breakdown at the end of the week. Underperforming notably, had some news hit on Thursday, and even give you that preliminary sign of a larger seller occurring on the earnings report. The stall that Thursday, and then the new week opening gap that rallies you on those flows, like I said, into a lower high territory, right? So a big red flag here is just anything I'm going to execute on. No, I don't really want to trade this. Like I said, I'm going to keep it pretty simple with my big position on SPY to 564 with potential for 560, and if we want to get a little greedy, 554. Um, but the meta chart does not look appealing long to me. We have gaps to fill below though, and then obviously the peg. But this was a underperformer this sequence, and you begin to see a larger seller off the report, and now this kind of look as well. The Tesla chart's a very similar one. 17% weak. You don't have the October gap filled. Yes, you had this digestion that occurred, but am I longing this? No, I'm not longing anything, especially when you consider that this was the Fed meeting day. I'm just not. And then you get these two gap ups on these wicks and the exhaustive look here, the continuation, and just the stalling out and small spread candles with some volume on them. So I'm not touching Tesla. Would think this trades to the NWAG at least, but I don't. This is a nice leg when you consider the context of this chart being still bullish to some extent on a higher time frame, but I would think we fill the October gap before I get long side focused, and I'm not touching that. Apple kind of stalling out as well. A notable underperformer. The April 14th gap that was sold has now kind of been your notable stalling area within this chart, if you say so. This disgusting distributive range in the report, the gap fill, and then the stalling at the peg as well is just, a higher time frame distribution developing a lower high. Like I said before, this is going to give you that reversal. This underperformed substantially, not substantially, but this does not look appealing. Not be alongside focus in April, but you have an important gap filled and potential for and a lot of volume pouring in. The potential for this to trade higher was there. The vulnerability for this to trade higher was there, but not a meaningful cause that's built out that's going to outweigh this cause that was built out, considering cause and effect, right? Not an appealing print. Like I said with these weekly prints as well, effort and result, it's a lot of effort being put in by buyers up here and a minimal result being established on a daily perspective. So just unappealing. unappealing charts overall, right? Netflix, I still think this is a UTAD. AMD with a very disgusting Wednesday print off of the, I think it was SMCI report or SMCI news that gapped this up on Wednesday. Amazon with a fucking hideous weekly closure. This was notably underperforming as well until that new week opening gap, but I think that was the last of this. Yeah, I mean, this is just unappealing on a lot of these names. Google had a nice pop on Wednesday, but I'm not long on this. You know, the long opportunity was in April. The long opportunity was in April down here. Now we have the reversion trade occurring. We have, you know, a 40% move on Microsoft, 33, and the exhaustion showing its hand in my opinion. So, yeah, nonetheless. Talking about Schwab, that and banks will be a focus later on as far as a larger position. If Schwab gives you a lower high of like 80 to 83, I will trade this on some sides to sub $80 into June. Potentially, JPM is just a red flag. Honestly, going to remove this. TSM, another name, giving you that, you know, rally, that 133 to 195 rally. But look at where the volume comes in at. Look at where the volume comes in on Monday. Look at the preliminary signs of a seller that occurred that week of the 28th and the week of the 5th as well. Just unappealing price action breakdown on Monday, on Friday, off of the gap up, but propped up by these flows, man. This as well, like I said with 564, if we see 564 in a lower high, sets up so many names for reshorts, right? Sets up Schwabington for a reshort, probably like I said, like here to here. But TSM on a higher time frame distribution that it's not been completed. We still have draw lower. We still have a seller within this range. We have a very exhaustive look and unstructured rally from 133 to 200 or 196. If this fills the new week opening gap and establishes a lower high, this is a focus of mine over SPY down to 166 on like July puts, right? I'm only trading SPY because I'm not going to try to top tick these names, but these names develop phenomenal trades soon on, you know, what would be, you know, a last point of support to some extent on this off this UTAD. But Palantir, I did try this on Wednesday or on Tuesday off the peg, and I took a 10% loss. But this is the breakout. You get to all-time highs. A ton of volume pouring in and an exhausted look. Small spread candles. Yeah, I'm good. I don't like that. I don't like hood as well, but I'm not shorting these. Giving you that continued exhaustive look on a weekly perspective. I do think this trade's lower. Like I said, you have to understand the cause and effect that was built out, and I don't think there was a meaningful cause built out, and you can see that in the subsequent continuation that we get. I don't like that. Oh yeah, UNH. This is going to give you a phenomenal reversion trade. This was a higher time frame distribution that occurred, and then the lower high that established itself off of this bid off the February gap down. But now we have the highest volume of all time on this chart on a weekly perspective, a name that's been around for 40 years. And, you know, that notable wick on Thursday, right? You already have, like I said, you know, you had the distributive look at new highs, the bid off this December 17th print, the weak rally, the gap down again on February 21st, the rally that was kind of exhausted, the notable signs of a seller up here, the breakdown off the report just continued lower into some more news here and here. And now we're 60% lower in a month. We have the historic volume pouring in. Remind you of something? CrowdStrike. Reminds me a lot of CrowdStrike. Previous distributive range, notable historic volume at all-time highs, massive panic selling 50% from the highs, notable footprints being built out, waiting for that higher low to be established, and a phenomenal reversion trade of the gaps above. So that would be what I would wait for. I wouldn't even buy shares on this yet. I would wait for a structural low to be put in, higher low, a clear risk to reward. This could go back up to 500 in the quarter three. Definitely something I'd be paying attention to, but not anything I'm going to execute on yet. First, Solar kind of outperformed this week. This is a phenomenal weekly print. I don't like Solar as far as trading it, but something that I'm keeping my eye on as far as the sell climax is built out down here off these 2023 lows. And then the nice print, the highest volume we've had in a while here on First Solar. So definitely something I'm keeping my eye on, but I'm not touching this. Just another example of, like I said, a notable buyer off the April 7th print, off the report, but they're still selling at the highs, and there's not a meaningful change of hands down here. right? That's why we now establish, a 51-day 0.17% new all-time high. Very, very notable buyer here and here. Props us up, fills this gap from April 4th. We trade lower. We have the gap down after report that sees a nice leg, but no real cause built out that's going to trade you to new highs. This should draw to this July 2024 gap fill, but you're seeing, a 4-hour high distribution that began in the earnings report in January. Higher lows attempted that are stalled. Just nothing appealing on that chart. So, yeah, I mean, that's pretty much it for the week. Like I said, my main focus is SPY to 564, potentially a little bit lower. After that, I'm cutting, and I'm waiting for a lower high to establish a position on. I'm getting full size next week. Like I said, I had maybe I will triple down on this position. I'll probably open up around break even, and then add some exposure if we pull back up to that. Like I said, here's that JPM collar up here, and get more exposure there. June 30th puts. I'm looking to take this down here, right? We have a lot of meaning behind 576, so a potential lower high could be established off that. And when shorter dated puts become vulnerable, that's when I become a buyer of those. Just needs time, right? Needs some time to expiration as well. But it's not a coincidence that this move happens after hours. A little annoying because I bought some puts here, 3DTs, and I lost like 20% on those. But not a coincidence that happens after hours. There's too many stars aligning, and it's just been a waiting game, right? I've been waiting for this short for a while. I've taken the stabs that have been offered, but now I spot a massive potential here that I can really slam. The shorts here and here. Shorts here was just to the gap below to reload long into May flows. We didn't get that, right? We got the GDP get it, earnings gap up, semiconductor news on Wednesday, and now this, right? So, I think about quarter by quarter, month by month opportunities, week by week, and I haven't seen any options trades that I'm really fond of, except for here, maybe here, until now. So I'm going to slam the table on this. I'm going to trade shorter dated on hourly structures when it's vulnerable, and I'm going to wait for lower highs to develop, right? But this is a trade that, is a great experience. I'm very confident in it. And I'm very confident in this. Like I said, this is not a meaningful rally. This is propped up by those flows and shortcomings, and I think that once those come off the table and volatility becomes a little bit uncompressed, we can see an extensive move to the 560 range, and then a lower high to short some other names. Like I said, the financial sector has a couple vehicles as well as TSM and Nvidia. But for now, I'm going to keep it pretty simple with this. Maybe trade some Nvidia, QQQ, or SPY by weeklies when the opportunities are presented to me. But like I said, for now, I'm going to be patient. I'm going to wait. I'm going to get full size, and I think we can start to see an extensive moves post expiration. But yeah, this is this is one of those things. Like I said, a new sequence is a new experience, and this has been a great experience in terms of okay, I should have been long. Would I even have milked this long on options up here? No, I would have been out all by that Wednesday. And then I don't like this long. I don't like this long. It's just been, attempting short. I thought we could get a short into the flows returning May 5th, and we didn't, right? And I just wanted that opportunity to reload the longs in these gaps, and we just didn't get it, and that sucks. But all that means is that this short is way more vulnerable. It's way more appealing to me, and it becomes way more of an asymmetric risk reward in my favor. And it's something that I can really slam the table on. If I got this gap fill, I would have absolutely slammed June's. Up to 560s with the flows, everything aligning. That was a phenomenal trade, but I didn't. So now I just get to slam the short that I've been waiting on for a while, and my P&L has been relatively flat since the night. Like I said, I know why. This was not an options trade. Sometimes that shares trade is 100 times better, and that's the case here, right? There were 2, maybe 3 leveraged opportunities, but by no means am I carrying options up all the way up here. Shares in the move. Now we have an options opportunity short side. So let's get it. Good luck. Have fun. There's too many confluences for me to be long focused, and there's enough confidence back behind this short trade that I'm slamming the table on it on June puts, and I'm really going to be a pig on this with the timing in the window that this sets up at and the sequence that we've developed overall. So